Hi guys, good morning. Welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, we are heading into Dhanteras and the mood on Dalal Street is extremely upbeat. Mine and your Diwali party may not have started, but the bulls have started partying hard and at an opportune time as well. In the last 2 days, we've seen the Nifty surpass the September swing highs. In fact, we are now moving towards 25,700. Of course, the global cues are not looking all that upbeat and encouraging this morning. But, if we can defy the global weakness and focus more on the domestic headlines and the kind of earnings that have been trickling in, who knows, we could clock in that 25,700 mark today itself. All depends on the bulls as to how, charged up they are going into a third straight session, if at all they gain today. In the pre-open, however, things are looking a little muted and that too with a negative bias. But of course, we'll get to know which way we are heading, especially, in terms of the market direction at 9:15 when the markets open for trade. But yes, lots to digest. As much as 35% of the index will be reacting to its numbers today. We had the likes of Infosys, Wipro handing in numbers post market hours. Geo Financial also came out with numbers post market hours. Eternal came out with numbers. There was a sharp reaction on the upside and the downside, but we'll take stock of what the street is saying about the numbers. And not to forget, we have big boy Reliance Industries reporting numbers today. So that will be one stock to watch out for. It was among the top gainers yesterday, 2% gains and top contributor on the Nifty. So going into earnings, the stock is looking upbeat. Let's see how things pan out today. Lots to discuss over the next 1 hour. We'll take up your stock related queries. We'll get you Muhurat trading picks from our experts as well. And of course, on our special Diwali segment, the Dhamakedar Diwali stocks, we will be getting you 3 top sparkling bets from Siddharth Bhamre of Asit Singh Mehta. So yes, lots lined up. You can't afford to miss the next 1 hour on Money Control. But yes, before we do all that, let's quickly take a look at the top stories at this hour. Wall Street ends lower after regional bank worries fuel a sell-off. The Dow sheds 300 points while the Nasdaq loses more than 100 points. The 10-year Treasury yield drops below 4%, hitting lowest level since April. Asian markets open lower, tracking losses on Wall Street. The GIFT Nifty is indicating a flat to negative start for the Indian market. Crude prices fall to its lowest level since May, driven by a larger than expected build in US crude inventories and mixed signals about India's purchases of Russian oil. Gold, meanwhile, continues its record run and soars past the $4,300 mark on safe haven rush and the Fed rate cut bets. Infosys revenue beats estimates while margin was a miss. The company tightens the FY26 guidance band on expected lines. Wipro also reports second quarter earnings in line with expectations. All the big 5 Indian IT services companies exceed muted street expectations in the second quarter. And in key earnings to track today, Reliance is set to report a strong set of second quarter numbers. Growth is likely to be led by the O2C business. Jio's EBITDA is likely to surge 16% and retail vertical EBITDA is expected to report growth of 11% on a year-on-year basis. All right, quickly, taking a look at a recap of yesterday's market action. The market hit a 4-month high yesterday. The Nifty has crossed the 25,600 mark on an intraday basis. Of course, it did see big buying ahead of Diwali, and the Nifty Bank, of course, is approaching the record high of 57,628 as well. Kotak Bank, Axis Bank, HDFC Bank, ICICI Bank, these were all the top contributors to the Nifty Bank Index. Mind you, as many as 9 banks will be reporting numbers tomorrow. So ahead of Diwali, it will be a busy weekend. We have the likes of HDFC Bank, ICICI Bank reporting numbers, as well as other banks like RBL Bank. Reporting numbers over the weekend on Saturday. But Reliance Industries in focus, that was the top Nifty contributor yesterday. It rose nearly 9%, in fact 2% ahead of its results, and Nestle was the top Nifty gainer after reporting strong second quarter results. It was up 4%. In the previous day as well, the stock was up and I think it has gained somewhere around 8 to 9% in the last 2 sessions. A lot of other stocks also will be reporting numbers, and of course they will be reacting to numbers. So yes, we are in the thick of earnings season, but in terms of the put call ratio, when it comes to the Nifty, it jumped to 1.38, the highest level since September 23rd. In terms of stocks in F&O band, there's only one today, Saman Capital. And when it comes to fund flows, good news in the form of abating selling pressure when it comes to the foreign investor community. They've bought shares worth 997 crore rupees in equities in the cash market. Second straight day of buying coming in from the FIIs, and DII buying, of course, continues as well. Well, without any delay, then let me bring on board our guest for today. Joining me is Raja Venkatraman, co-founder, Neo Trader. Raja, lovely chatting with you, especially at a time when the bulls are marching ahead with full gusto. 25,600 was crossed. That's the September swing highs. What are the chances that we will see, a retest of 25,800 or 25,850 on the upside ahead or before the Muhurat session?
Yeah, good morning, Nandita. Thank you for inviting me to the show. Happy Dhanteras to you and the entire team at Money Control, and also the entire viewers as well who are watching this show right now. Now, when you take a look at the festivities which are coming up from tomorrow, we can definitely see that the market is also getting into a festive mode. Well, in the market, you make money on both sides of the table, but then when the market is in green, that's what brings a lot of cheer. So now, looking at the way the markets have behaved over the last few days, we have been reiterating in this show that a close about 25,300 was very crucial for the market, and after that, there has been no stopping the market right now. And with the kind of sustained positive triggers that are emerging across the sectors, so we need the sectors to participate, and we have seen that all the sectors have participated quite well, and we are shy away from the all-time high, both the Nifty and Bank Nifty. We need some encouraging tailwinds right now, and we are receiving it in bits and pieces. So I would continue to remain a bullish trader in this market, bullish investor in this market, but then I would also parcel my approach and buy on dips as well. So it's not a one-way linear run which is going to emerge, but then yes, the bulls are set for some upside. So now my revised stop loss, or the revised risk zone, will be 25,300. So unless and until it goes below 25,300, I will continue to look at every dip as a buying opportunity. Now the question will be, should I buy at this juncture? Yes, you can participate in certain pockets, because those pockets continue to emanate some positive exuberance, because we have got the result season in play. We are seeing a lot of encouraging triggers also from the FI short covering, and also the cash buying which is being done by the FI as well as the DI. So overall, there is a buying scenario that is getting created. So one should have a dip buy approach, because the current market continues to favor that approach over the last few weeks. So like you rightly said, we have crossed the September swing high. We are looking for more positive traction, and I see that the next week is a curtailed week. So one should also be a little pragmatic. They should be practical, and they should consider booking some profits at this juncture, because the market is not extremely bullish. But then yes, it is having a lot of bullish signatures that say that every dip will be a buying opportunity. There are certain pockets like, say, metals and the pharma, the FMCG space, which are showing some traction here. And I would say that those are the spaces that one should consider. And overall, if you see over the next few weeks, I would say that the market is going to show some bullish signs. So those of you, if you go back to even the last week, I said that one we should not do is go short. And now what is happening is we are having this lot of this move has been sponsored by the short covering action. Now in the forthcoming days, we will have some genuine bullishness also creeping in, like all the result season which are coming out. And if the result season turns out to be favorable, it will manage to hold the bullish bias which has come in. Because now if the results are not in play, and whatever bullish signatures which we have seen will get nullified. So it's a very crucial moment. So be on the bullish side, keep booking profits, and enjoy the festivities. So that's what is the message to all the readers out there and all the viewers out there.
Sure. Sure. As we speak, we're getting the first ticks, and the markets have opened up, and not on a very, very positive note. The Nifty is down somewhere around 30 points or thereabouts. We are holding on to the 25,550 mark. The mid-cap index, just about marginally in the red. But we are looking to cut down the losses. The Nifty is now down just about 25 odd points. So we'll have to see whether we can defy the global weakness and, perhaps get back into the green zone. But of course, you'll have to wait for that, let the rates settle down a bit. In terms of the broader end of the markets, as I mentioned, slim losses on the Nifty mid-cap index, but the advanced decline ratio is skewed in favor of gainers. So one should take heart from that. 1,000 advances to 698 declines. So almost, it's almost even Stevens, but more, tilted towards the advances. In terms of sectors, I can see the Nifty Bank Index is cooling off slightly, but holding on to that 57,300 mark. The Nifty Bank Index, of course, is fast approaching its record high as well. So some bit of selling pressure after the recent gains. In terms of the other sectors, then let's take a look at which are the sectors that are taking the lead at the current juncture. Very slim gains in the form of autos and pharma. FMCG as well, but more sectors are tilted towards the downside, with the IT pack emerging as the biggest laggard. Of course, we'll be pulling up stocks like Infosys, Wipro, LTIMindtree as to how they are reacting to their numbers. But for now, the Nifty IT is down 1% as we speak. Real estate, after a solid move in the last couple of sessions, it's down 0.5%. You have metals also trading with a negative bias, and so is the PSU Bank Index. Now, let's come to the Nifty movers. Top laggard is Wipro. The street believes that there could be some margin pressure in terms of the recent acquisitions and ramp-ups. So I think that's one reason why the stock is down somewhere around 4%. HCL Tech is down 2%. Infosys down over a percent or so. They have tweaked the lower end of the guidance. That could lead to some bit of tempering of revenues in the second half of the year. We'll take stock of what the street is really saying about Infosys as well, Tech Mahindra. So all these tech names are under pressure. So are the likes of Ultratech Cement ahead of numbers on Saturday. You have life insurers continue to sulk in trade, and even the likes of Kotak Mahindra Bank, HDFC Bank that saw a good up move yesterday have succumbed to some bit of selling pressure. What's doing well is Asian Paints. That's the top mover, up almost 3.5%. Nestle extends its gaining streak, 3% up. HUL. So yes, it's all about consumption. The first three names on the Nifty gainers list are from the consumption pack. Reliance upbeat ahead of numbers, and so are the likes of Titan, Max Healthcare and Maruti Suzuki. But it's a fairly muted start, as was being hinted by the GIFT Nifty. Let's take stock of your recommendations first. Raja couldn't do so in the pre-market, pre-open. So what exactly are you recommending for viewers for the day?
One could, looking at the way L&T has been moving over the past few weeks, we can clearly see that there is some bullish interest that is developing. And I would like to buy L&T at the current levels, have a stop at 3830 for a upward trajectory towards 3950 to 4000 within the next 2 to 3 days. And the second stock which I would like to recommend is a buy in Fortis. The pharma pack has been doing well, and Fortis has been leading from the front. So buy Fortis above 1100 with a stop at 1070 for an upward trajectory towards 1150 for the next 2 to 3 days.
Okay, that's about the recommendations coming in from Raja, L&T and Fortis. But let's talk about some of these tech names, the likes of Wipro, Infosys, HCL Tech, Tech Mahindra. All these companies have reported better than expected top line growth. Expectations are fairly low, but they have managed to top expectations, in that department. Revenue growth especially has been, fairly good for the likes of Infosys, even TCS for that matter. Any stock that you will be taking a bet on when it comes to the IT names?
So when I take a look at CNX IT, the rally what I have seen over the almost 2 years is that the entire move is coming before the result season begins, and post that the entire sector slips into a sleeping mode. While we feel that the IT sector has been one of the key sectors to watch out for, I still continue to believe that the rally could be limited, and if one needs to participate, then the mid-tier IT companies like Persistent, Coforge, Infosys, those names would be a better one than the big names. Even after Infosys result yesterday, the ADR seems depressed. So now, when you are looking at not much participation emerging here, there are a lot of other sectors that are available right now for an investor or a trader. So one should reduce the affinity to IT and look at other sectors for making better prospects in the market.
Okay, look at other sectors for better prospects. Asian Paints, that's the top Nifty gainer, 3% uptick. Of course, GST cuts will be a tailwind, and crude prices have come off quite a bit. That's also a tailwind for the sector. Anything that's catching your attention? The likes of Asian Paints, Berger, Kansai Nerolac. Which ones do you like within the paint basket?
Yeah, amongst the paint basket, Asian Paint seems to be settling down, and with the impact of the crude prices, we are now seeing that there could be some rebound here. And when you take a look at the overall sector itself, they have been in a declining mode, and now with the markets rebounding, we can see that there could be some encouraging tailwind emerging here, and this could be a good sector to look into from a low risk point of view. So yes, amongst the paint basket, Asian Paint is a better bet because it has got room still around 2750, and one can take a 1 week to 2 week bet on this. So I don't envisage a long term kind of a view here, but then you could look at it from a trading perspective, short term trading.
Look at it more from a trading perspective. But let's talk about Nestle as well. The stock has been on a tear. Numbers have been good as well, above expectations. There's some brokerage notes that came out. Morgan Stanley, they still remain underweight, and the target price is at 1,010 rupees. That's lower than where the stock is at the current juncture. They've said that management is expecting milk prices to soften, coffee prices to stabilize. But edible oil is likely to remain inflationary according to Morgan Stanley, and HSBC has a hold call. The target price is higher here, but lesser than where the stock is right now, 1260. How would you look at the likes of Nestle? Do you see the stock going past 1320 kind of levels anytime soon?
Yeah, amongst all the FMCG counters, I have found that Nestle has had minimal price damage, and also with the brokerage, ratings being mixed, I continue to feel that this stock could definitely lead. Compared to the other names like say Marico, Britannia, ITC, I would feel that Nestle would the consumption boost which we has been given by the government itself, and also we are all expecting that the FMCG will fire. So maybe with the festivities around the corner, all the FMCG companies are showing some traction here, and I would say that this company is Nestle has got more room at the top. So I would say that one should look to buy Nestle as an investment bet as well, because targets towards 1800 is possible within the next 6 months.
Okay, higher targets within the next 6 months. Coming to Eternal then, before taking up our viewer queries, in fact, I can spot a query on Eternal as well. So it would get addressed here only. Numbers came out, we saw a very sharp reaction on the upside, and then we gave up all those gains. In fact, today as well, we are extending those losses. In terms of the brokerage notes, CLSA continues to believe that this stock is a high conviction outperform. And they have a target price of 450 rupees. Blinkit, of course, according to them, has surpassed the net order value. Despite the expansion and of course EBITDA being hit by acquisition cost as well. Even HSBC has a buy call. Target price is at 390 rupees or thereabouts. Post numbers, how would you look at Eternal? The stock, of course, perched near record highs. Obviously, last two sessions have not been all that great. Would you advise a buy on dip here?
Yeah, what I observed in Eternal is that the pattern of the price action, always on the numbers, there is a sharp reaction to the way down. But then considering the brokerage upgrades and also, their fortunes have changed ever since Blinkit has entered their ecosystem. And with the kind of consistent performance which they are delivering. And if you see, the revenues have bet estimates. And when you consider a company like Eternal, you would see that people will be willing to oblige that element of profitability. And you can see that the consistent performance which the stock has been doing over the last few days, and also the company's track record overall has been quite good. And with the consistent inflow of funds into the company, I can see that this stock is set for more upside here, and a target of 450 is very much possible. And over the last, I would say, 2 years, every dip in Eternal has been a buying opportunity, and I'll continue to hold on to that view. And I would say that the possibility of more upward traction is very much in store. So this dip which was offered in the last few days, this and I would say that current levels are on dips towards 325, 330 zone is also a good opportunity to consider, because post the numbers, post these initial reactions, I think that stock will once again resume its upward journey.
Okay, the stock will resume its upward journey. That's about Eternal. Stock, of course, came under pressure post its numbers yesterday, but nevertheless, target prices range anywhere between 370 to 450 on the stock. But let's take stock of our viewer queries then. Couple of queries we've already addressed. Zomato and L&T also was on the feed, but of course, it's one of Raja's picks. So let's focus in on some other queries then. What about the real estate space? Today, some bit of a cool off, but Oberoi Realty saw good traction. And Nana Prakasam wants to know your thoughts for the short term on an Oberoi Realty. Would the charts excite you of an Oberoi Realty, or would you look at some other players like DLF?
Yeah, like I've always been mentioning in our shows that Bank Nifty has been one of the major triggers, and yes, now we are seeing the effect of the repo rate cut impacting the real estate sector as well. Well, amongst the real estate pack, again, what I've observed is that be it in any sector, the mid-tier ones have actually been performing. If you see over the last 1 year, the markets have not been moving much, the broader indices, but then the mid and small cap have given a lot of good movers. So again, in the real estate space, I would say compared to an Oberoi, which is still trying to move its leg up, or the DLF, I would say that I would go with a Godrej property, because Godrej property is in very fine form, and I feel that the stock has bottomed out. And if one wants to invest into a real estate space, then Godrej property would be my bet. It's made a nice double bottom here, and it is looking for a rebound here. So again, one should consider a move towards 2600 possible within the next 2 to 3 months. It is again a short-term play. So with that in mind, and the risk level would be closer towards 2000. So you have a 1:2 risk to reward ratio.
Okay, Godrej property is looking better and appealing on the charts. Hope that answers your query. There's a query coming in from Naveen on a Bharat Forge. The stock saw good traction in the last 6 months. We saw double-digit gains, but last month or so it has hardly gone anywhere. No trend, no particular trend has been visible on the charts. At 1264, would this be a buy, or how would you approach it?
Yeah, Bharat Forge is coming out of its shadows, and I can see that this stock is getting positioned for a multi-week run here. So this is a good point to enter into Bharat Forge, because I feel that the stock is looking set for more upside here. You can see that the defense, it's also one of the players in the defense space, and I can see that this stock is showing some upward traction here. I would be more comfortable above 1265, because above 1265 we have a target of around 1500, which is possible within the next 6 months.
Hmm. Okay, that's about Bharat Forge. Let's quickly move on to our next query that's come in from Aisha. She wants to know your thoughts on an Ircon. The stock has come off quite a bit, from June onwards. We can see like a 22% cut on this particular stock. How would you approach this? It's at 171 or so, not very far from its 52-week lows. Is it expected to pick up steam anytime, or would you expect more downside here on?
See, amongst the railway, railway is a theme. So, the market continues to offer us various themes. And I would say that the railway theme has run out of its steam here. So, everyone tries to encash the railway theme. But I feel that IRCON would continue to sulk at the current juncture. And it's best that one exits this counter, because right now the counter is not offering much promise to move to the upside, and look at other investing bets that can emerge, because this is a good time. A lot of interesting bets are going to come about. So that would be a good time to switch.
Okay, it will be a good time to switch. Railways as a theme not looking all that appealing at the current juncture. But what about OMCs? There's a query that's coming from Dipankar, and he wants your thoughts on OMCs, particularly BPCL, where he has 1,000 shares at the rate of 340 rupees. He wants to know the prospects. Now, the stock is at 337. Marginal losses here, but would you expect OMCs to clock in more gains here on, and what should he do with his holding?
Yeah, considering the nature of crude prices and the impact which is having on the OMCs and the run which we have seen over the last few weeks, these OMCs seems to set to continue. And amongst them, BPCL is definitely performing quite well. And the price mentioned is quite close to the current price action. So one should continue to hold on, because the overall picture is not disturbed. And one can continue to hold this stock, because higher prospects are envisaged in the coming months. So when you take a look at the overall setup, and when you take a look at the overall price action, I feel that one can hold on to this stock.
Okay, that's the view. Hold on to that stock. Hope that answers your query. A couple of more queries then. One query from JM Teja. Is it a good time to buy Vari Energies at the current price, and what would the target be? Vari Energies, what would you suggest he do? Because the stock is down 0.5% right now. Last 6 months have been phenomenal, 55% uptick. But even last 7 days for that matter, it has picked up steam once again after a brief pause. Is it a buy now, or wait for some more dip to get into it?
Yeah, Vari Energy, considering the semiconductor space that has been continuously been the focus of the traders, of the investors, as well as the government, I would say that this stock would continue to fuel more upside. One should be holding on to this stock, because this stock has got a potential to move towards the 4,500 mark within the next 6 months. And there is nothing which is disturbing the price action right now. And also with the encouraging news flow that is emerging, one can hold this stock for the next few months.
Okay, hold the stock of Vari Energies for the next few months. The last couple of queries then. I want to take up this query from Anil, and he wants to know your thoughts on Canara Bank, whether it's a good time for entry for a positional trade. What would you advise, and which ones do you like within the PSU banking lot?
Yeah, I have been actively promoting or suggesting Canara Bank, SBI, and Bank of Baroda amongst the PSU banking space. And the order has been in the way which I have mentioned. And Canara Bank has moved a fair bit to the upside. I would say that if one is having Canara Bank, one can book some profits here, and then look at levels of 117 to re-enter into the stock. The stock continues to be a good mover, but then one should also factor in that we are at the end of this week, and we are going to witness some profit booking. So the dip by levels 117 to 119 could be a good zone to re-enter into Canara Bank. If you want to participate in the PSU banking space, my bet will be on Canara Bank.
Okay, That's the call then. You can look at Canara Bank at the current levels. All right, the very last query. Let's take it from Satya CK then. He wants to know from you whether one should shift away from non-performing chemical sector like Aarti Drugs and NoSil and shift to the likes of a Paytm. Would you advise that?
Yeah, very good question. Because the way the markets are behaving right now, they are rewarding the new age theme which is happening here. And you would see the likes of maybe Eternal, Nika, Paytm being rewarded, and even the monoliths like NSE, MCX, which you saw, are receiving good traction here. So the capital market stocks, so that's a new theme that has come up. The QSR, that's a new theme that has come up. So as a investor, my suggestion will be that every year there will be a new set of themes that will come up. So one should be more aware here, because market is a place where you got to be more aware, and you also got to realign with the themes that are in play rather than stick to the old themes. So that would be my suggestion to all the viewers out there.
All right, with that suggestion, we would wrap up our query segment. And for those whose queries we couldn't take, please don't get disheartened. We'll try and take them up in our next show. But Raja, before I let you go, any Muhurat trading picks for our viewers?
Yeah, sure. So I have three more trading picks from my end from different sectors. One is from the metal sector that has been showing some good traction here. So I would like to recommend Jindal Stainless. One from the consumption theme, and I find that the other theme which I mentioned is the liquor theme as well has been developing now into a theme. So from there, I would like to mention Radico Khaitan. And the third will be, of course, what you mentioned earlier, which is Larsen and Toubro. So these are the three stocks which I would recommend as a Diwali Muhurat.
All right, those are the Diwali Muhurat trading picks to keep on your radar. With that, Raja, I would like to thank you for joining in. Here's wishing you, your family and your entire team a very, very happy Dhanteras and very happy Diwali in advance. Wishing you a very, very profitable Samvat 2082 as well. Health, wealth, peace, happiness, all of these things. Hopefully, they come your way in the new Samvat.
Same to you. Thank you for everything.
Thanks a lot. Thank you. Well, on that note, take a look at what the markets are doing. In fact, we have edged back into the green as we speak. 32-point uptick on the index. We are above that 25,600 mark. So yes, the bulls are clearly defying subdued global cues. So yes, we may have taken a pause this morning, but the party is far from over. As we progress through the day, who knows? If we can, make a dash at that 25,700 mark on the upside as well. We won't be surprised given the fact that it will be the third straight day of gains, solid gains coming in on the last day, because yesterday's move saw market cap addition of 3 lakh crore rupees to BSE's entire market cap. Well, mid cap index continues to be in the red. But the breadth is firmly in favor of gainers. But let's take you through the expectations from index heavyweight Reliance Industries. The company reports numbers today. It is expected to report a robust earnings growth on improved refining margins and sustained growth in its consumer businesses, Reliance Retail and Jio. Now, net profit is expected to rise 11% from a year earlier to about 18,450 crore rupees according to analyst estimates. Consolidated EBITDA is seen climbing 14%, supported by gains in the O2C, retail and digital services businesses. Refining margins have remained firm throughout the quarter, aided by strong diesel and jet fuel spreads and a weaker rupee, which improves export realizations. Now, brokerages say that the O2C segment's resilience and broadly stable petrochemical spreads are expected to support consolidated performance. Now, both Reliance Retail and Jio are expected to extend their steady growth momentum. In fact, UBS forecasts retail revenue growth of over 13% year on year, with grocery and fashion formats leading gains. And in digital services, UBS and Nomura both project around 15 to 16% EBITDA growth year on year, underpinned by continued subscriber additions and modest gains in the ARPU, or average revenue per user, as well. Reliance showing strength, 0.5% up on that stock. Mind you, yesterday it was the top contributor to Nifty's gains. And of course, we did see the Nifty clock in solid gains as well. But time now to shift focus to our special Diwali segment, Dhamakedar Diwali stocks. All right, over the last few years, investors have been getting used to 20 to 25% returns from the market. But Samvat 2081 turned out to be a reality check of sorts, right? Because portfolios barely saw any returns. But here on, are we back to normal? Or can we get back to those supernormal gains of 20 to 25%? What would be a reasonable return expectation from the new Samvat? Let's bring on board our guest then, Siddharth Bhamre, Institutional Research Head, Asit C. Mehta, Investment Intermediates, joining in to answer that question and of course to share 3 dhamakedar Diwali stocks for our viewers. Sid, lovely chatting with you as always. As I was mentioning, last 3-4 years we had gotten used to supernormal 20-25% kind of returns, and that was being looked upon as normal. But now of course we had a reality check. The Nifty's barely moved in the last 1 year. Going forward, what is a reasonable return expectation from Samvat 2082?
Morning, Nandita, and thanks for having me on your show. It's always a pleasure to interact with you. And onset of festive season starting, I want to wish you and your audience and viewers very very happy Diwali, and may God bless us all with good health and wealth. It is a wake up call for people who feel that stock market goes only in one direction. But the best thing, what has happened, that despite higher valuation, Nandita, the stock market has not corrected significantly. And this is what typically is called a time-wise correction. But the best part in this market, if you see, even though, last 1 year markets have not gone anywhere, we have seen a lot of sector-specific, stock-specific action. And this is a fabulous time for money managers to show that what they're made up of. When index doesn't go, but still your portfolio does well, this is the time when men are separated from boys. And I still feel that for next 1 year, we may not see very significant upside from the headline index per se, but there are ample amount of opportunities in all segments, be it large cap, mid cap, or small cap, where decent amount of money can be made. Only thing is, because you're not in a bull market, you have to reduce your expectations. When interest rates on FDs are around 6.5%, equity, if it gives you 15% return, I think you should take it with both hands.
Sure, got your point. Of course, as you mentioned, there have been quite a few movers, individual movers, right, over the last 1 year, even though we haven't got, great returns on an index level. So where are you spotting more alpha generating opportunities now? In the mid cap space, or would you, hunt for it in the large cap universe?
See, it depends totally what's your objective. We are finding a lot of potential upside in smaller and mid cap space, but not as a basket. Say maybe out of 100 stocks, there might be 5 stocks where we are seeing, decent upside, maybe in plus 20% range, and those kind of stocks which we would probably discuss today. But from a fund management perspective, from a portfolio management perspective, and I'm not talking about professionals, I'm talking about individual portfolios, you need to have a balance. There's a lot of money which has gone into mid cap and small cap funds. And, market is testing patience of all these SIP investors. Yes, we talk about, invest from 5 years, 10 years perspective, but when you don't see returns since the last 1.5, 2 years in your funds, whereas FD has given certain returns, there might be an herd mentality, which may not be right, but it happens. You might see, some correction in market, which would lead substantial correction in some of the mid cap. So for me, it would be blend of all. Large cap, mid cap, small cap opportunities are there everywhere, but not in plenty. You have to be very careful. You have to be very picky in this kind of market. I'm expecting 1 more year of consolidation in this market. I'll be very happy if markets are, probably, plus minus 5% here and there. But yeah, stock specific, we should interact more.
Sure. Okay. One should remain stock specific, and of course, you are expecting another year of consolidation. But any thumb rule while selecting stocks before we come to your Pataka picks? Let's talk about a thumb rule that investors should follow in the new Samvat while picking stocks.
Uh, you know, growth investment is something which everybody is talking about, and rightly so, because many a times we have seen that value stocks remain value stocks for prolonged period of time. They remain attractive. So you should obviously chase growth, but growth at certain cost. We are seeing some of the mid caps getting valued, 60 times, 70 times, and I'm not talking about brands. I'm not talking about consumption stocks. I'm talking about some of the IT stocks, some of the manufacturing spaces, pharma spaces, where because there is 15% stocks got valued at 45, 50 times forward earnings for an earnings growth of 20-25%. They were still getting expensively valued. And that 20-25% growth is gone. Now they are hardly growing at 10-15%. So there has been some correction, but that correction can be deeper. I think investors, at least for next 1-2 years, should have, and there is no thumb rule as such, Nandita, which is going to be there for perpetuality. You have to adapt to the changing market situation. So look for the growth stocks, but don't go all out for a stock where valuations are expensive. So a lot of people see P/E ratio. I think there's one more ratio which is very important to value growth stock, which is price to earnings divided by growth, PEG ratio. If PEG ratio is substantially about 1.5, I think you're buying a very expensive stock, no matter how good that company is. So keep that also in mind, is what I would say.
Yeah, Sid, you mentioned peg ratio, and since we are in the middle of a festive season, I can only think about another peg. But okay, let's not talk about that. Let's talk about your recommendations then. The dhamaka stock picks for our viewers for the new Samvat. It's time for the big reveal. Let's start with the first stock, and I believe it's from the cement pack. Why do you feel that a cement stock could cement solid gains in your portfolio, and which stock is it from this universe?
So it's very surprising, when people ask for Diwali picks and somebody come out with a cement stock. But then there are very solid reason to talk about this stock, which is JK Lakshmi Cement. It's a small company. It's a hardly 10,500 crore market cap company. But then we are seeing the intent of management is quite aggressive. Generally, we are seeing capacity expansion. Now, cement, if you see, cement sector is going through consolidation, Nandita. A lot of big players are acquiring smaller players, and smaller players are getting re-rated. Smaller players are not doing too much of expansion. Yes, everybody's expanding, but look at the intent of JK Lakshmi Cement. They're expanding from current capacity, cement capacity of around 16.5 million tons to 30 million tons. That's almost double the capacity in next 3-4 years. That is still FY30. Right now, company is strongly present in northern, western, and northeast market, and we are seeing that high growth is coming from northeast. The realization is also substantial. Generally, a mid cap company or a small cap company like JK Cement or the peer-to-peer comparison has realization of around say 4,900, 5,000 rupees per ton. JK Cement right now is having realization of 5,200, and we are expecting realization to improve. Obviously, most of these cement companies are also going through cost-cutting measures, going green. So there's a lot of captive power, green power, which JK Lakshmi Cement is going to have, and thereby reduce the cost maybe around 60 or 80 rupees per ton in next 1-2 years. Also, there are other businesses which is like RMC, Putty, AAC blocks, which are cement blocks which makes construction faster. That segment is also doing well, though it doesn't have great margin. But then to be in the value chain, the company is getting aggressive there also. It currently constitutes around 9% of total business. It would probably in next 1 year go to 10%. Even from valuation perspective, large caps trade around 18, or say Shree Cements, Ultratechs of the world trades around 18 to 21 EV/EBITDA times EV/EBITDA. Mid caps generally trade around 12, 13 times, and the bottom, that is small cap, trades between 9 to 12 times EV/EBITDA. Now, JK Lakshmi Cement with aggressive intent, good earnings growth, good capacity expansion are available at today 9 times EV EBITDA. We are expecting decent upside around 25-27% upside in stock from current levels. We are valuing company around 10.5 times EV EBITDA to FY27 earnings, and that's a great stock to be in right now from cement space.
All right, a great space to be from the cement space. But if I may play devil's advocate here, there are structural tailwinds for the sector, as you mentioned as well, post the GST cuts, but it remains inherently cyclical. There are times when demand moderates, especially during the monsoon season, and also the price hikes sometimes are unsustainable, right? So, what are the key downside risks, for a stock like JK Cement? Especially, in fact, for the entire cement pack, especially for the likes of JK Cement.
So obviously, the good amount of growth comes from two segments. One is housing and one is infrastructure. So if you see, a macro headwinds coming in and housing taking a beating or slowing down, obviously most of the cement companies would suffer on that. Also, what we are waiting right now is government capex to increase, and that would probably, give a fillip. If that doesn't come, then also cement companies may not see substantial hike in revenue or growth. There were some unfortunate nature-related events which have happened in North and Northeast, where JK Cement has good presence. So purely from JK Cement perspective, I think headwinds are less at this point of time. There's a lot of construction activity which is now going to happen in North as well as Western market, and they're also trying to foray into other markets. So I think with capacity expansion and the macro, I won't say tailwinds, but the way things have been panning out from infrastructure perspective, I think the risk attached to the investment is quite less. And purely from valuation perspective, also it is pretty attractive. Stock has done well. It corrected in between, and I think the downside from current levels is quite less. So risk reward ratio is also pretty good to be in this space.
Okay, limited risks, and of course the risk reward ratio also looking fairly attractive. But let's move on to your next stock then. It's a snacking star, if I'm not mistaken. That's also been a big beneficiary of GST cuts, and the mention of pegs would be more appropriate here. Let's talk about that pick then. Sid, which one is it?
So Bikaji is one of our coverage in FMCG space, consumption space, and I strongly believe that the way things are panning out from macro perspective, we are going to see uptick in consumption. We are going to see spend increasing, and when there are small GST cuts, when interest rates are down, it will take time for people to take bigger liabilities. When I say bigger liabilities, I'm talking about bigger investments. So if today GST cut is there, or interest rate cuts are there, people are not going to go and rush to buy homes. People are not going to rush and buy vehicles or two-wheelers. But somewhere these small consumptions would increase. So we are expecting Bikaji to do pretty well. Bikaji is from the lineage of Haldiram's, and the main product of this company is bhujia. 35% of the sales happen from bhujia, 35% from ethnic snacks, and the other like sweet packages and all are also contributing substantially to the revenue. Company Nandita has done a lot of capacity expansion. Predominantly, it was only in Rajasthan. They are market leader in Rajasthan, Bihar, and Assam. And now they have, identified some focus states like MP, UP, Maharashtra, where population is pretty high. They're also going, towards Chhattisgarh. They have made some decent grounds over there. Also trying to foray into southern markets. Right now, after its capacity expansion, it is just utilizing 45% of its capacity, and that's the reason some of the return ratios have come down for the company. But going forward, as we don't see any significant capex plans, we are expecting capacity utilization to improve from 45% to 70% in next 2 3 years, and also margins to improve substantially. Also, interesting point here is that these small ticket size snacks generally has lot of seasonality or impulsive nature of buying. If it's a 5 rupee pack, 10 rupee pack, but mind you, for Bikaji, 60% of its sales is coming from family packs, where company can easily absorb, pricing pressure and can do, change in grammage. And their margins are also substantially higher compared to the smaller packs. Taking all these factors into consideration, also some correction in valuation. It's not a cheap company by any means, but FMCG companies which do have brand values do command higher Ps. Bikaji at this point of time is trading somewhere around, the kind of levels which you're seeing, the kind of price to earnings ratio we are seeing, we see decent upside. It's not a multi-bagger, obviously, but certainly the statistics which we are seeing, the barometers which we are seeing from valuation perspective, it offers decent upside around 20-25%. Now, Nandita, you'd be wondering 20-25% in a small cap stock. We are in a market where it's difficult to make returns. So we have to be realistic. You can't come and start talking about multi-baggers when markets are not giving you, that kind of opportunity. So even in a consolidating market, if you get a proper, well-researched stock with good parameters, you can easily take these kind of returns. So Bikaji is one of our preferred picks from small cap segment.
All right, but you expect a 20-25% upside. Any risks to your upside target? For Bikaji, as you mentioned, it's not a cheap stock, but it does offer a 20-25% return potential. What could be the downside risks to your target?
See, there are two things which are very important in company like Bikaji. One is the quality of product. I don't think so. We are going to see anything going down there. And second is how much you invest in distribution and what kind of returns or how much reach you get in those distributions. Sometimes, identifying a market and being too aggressive in terms of spending and that not going right, that can hit. I think consumption space is a less riskier space. There is more visibility in earnings, and that's the reason the cost in the sense I'm talking about the earning multiple commanded by such companies are very high. You look at HUL, Britannia. I'm not comparing Bikaji with these companies. What I'm trying to say is wherever the earnings visibility is very high, the valuations are also higher, plus the brand value. So the downside risks are only from ad hoc spending management probably would end up doing to make quick inroads in new states, which looks very unlikely at this point of time. Management has shown a lot of, composure. Management has been pretty upbeat on how, in a measured way, they are getting into new states. And prime example of that how they have made inroads in state of Chhattisgarh and done pretty well over there. So that can be the reckless spending in ads and distribution. That can be the downside risk, but otherwise I don't see that happening.
All right, got your point. Sumptuous gains of 20-25% can be expected from a stock like Bikaji, and that's among the 3 dhamakedar stock recommendations from SID for Samvat 2082. But coming to the last one, that's also from the consumption space as well. Which one is it, and what's the rationale?
So we talk about Diwali and we won't have, paint companies that's, not done. So one stock from paint company and which I personally like because of how it has diversified its earning into 2 different segments is Kansai Nerolac. Now, Nandita, we all know that paint industry since last, or especially paint stocks since last 3 years have not gone anywhere. In fact, they are one of the largest underperformer, then why we are giving this stock? Because sometimes there is a story and sometimes there is valuation. And now we are seeing that the negative story in paint industry is subsiding. We are seeing that competition has stabilized. We have seen that margins are bottoming out, and there has been pre-monsoon. There was visible uptick in demand. Of course, seasonality plays in, and rainy season which got prolonged. So Q2 may not be very significant for paint companies, but we are expecting high growth to take place on low base effect. Q3 and Q4 to be substantial. For Kansai, as was mentioning, 45% of revenue comes from industrial segment. And I think day in and day out, we have been talking since last 3 months how auto stocks and auto industry is doing well. Kansai enjoys around 50 to 55% of market share. The paint which is done on cars and bikes, so that is called industrial paints. And Kansai has 50 to 55% market share of that. So if you are expecting good growth to happen in automotive space, or which has been happening, then Kansai is the natural beneficiary of it. We are also seeing, margins which are bottoming out to, move higher from current levels. Kansai historically has traded at very high P multiple. It is available at, the cheap 26, 27 times, 25 times, 1 year forward earnings. So here also, I feel that story was negative. Now, no story, or probably it would turn positive. Valuations are great. Everything is now going to turn towards upside, and valuations are pretty attractive. So great stock to be in, value stock, if not growth stock. So there were two growth stock which I gave you, which was JK Cement and Bikaji, but Kansai and Aerolac seem to be more of a value stock. And not that there's no growth. The growth is going to start. You're going to see growth in next 2 quarters and over a period of 1 2 years as well.
Okay, that's about paint. And of course, there's this crude tailwind that is emerging as well. Crude prices have cooled off quite a bit. And as you mentioned, competition is also settling down within the space. But he has two growth stocks and one value stock from SID, in the form of JK Lakshmi Cement, Bikaji, as well as Kansai Nerolac. But, those are all your recommendations, the Dhamakedar Diwali stocks from you, Sid. But I have put together a very short rapid fire round to really understand, why you have picked up these stocks and which one is your favorite. I'm sure you won't really name it blatantly. So I've put together this rapid fire which would help us understand which one of these is your favorite. Let's start with the first one then. If you had to describe Bikaji as a Diwali snack, which one would it be? Would it be the evergreen motichur laddu, or would it be a surprise jalebi? And why?
So can I change the option? I like Kaju Katli more than anything else. So that if you have give me a choice, and if that's not choice, then jalebi. No specific reason, because the question is as such. But yeah, out of two, I like jalebi more.
Okay, got your point. It will be a jalebi. Okay, so if these stocks, JK Lakshmi, Bikaji and Kansai, if they were part of a festive thali, which one would you serve first?
I want to make thali strong, so probably JK Lakshmi. And reasoning being, we are seeing good, earnings growth happening over there, and stock is in great momentum. So if near term, if I have to see, and from long term as well. So first thing first, JK Lakshmi Cement.
Okay, JK Lakshmi Cement, that would be served first in a festive thali. And which one of these stocks would you gift your investor friends for Diwali? And which one would you keep for yourself out of the three?
Well, as a compliance, I don't, put directly money into stocks, especially those stocks which we are covering. But nevertheless, to answer your question in a lighter way, and that's a disclosure, maybe I'll keep a value stock for myself and give a growth stock to friends.
Okay, I got the
gist. They want immediate returns. All friends want immediate returns. So
yeah,
they should chase growth.
But you are ready to be patient. So, just for the benefit of our viewers, three stocks that we spoke about, two of them were growth stocks and one was value stock, right? Growth stocks were in the form of JK Lakshmi and Bikaji, and value stock was Kansai Nerolac. Just saying. I mean, of course, you have compliance issues, and I'm not like forcing you to answer this question in terms of which stock you want to be keeping for yourself. But last question, really, if your portfolio were a rangoli, which stock adds the brightest color?
I think it's a no-brainer. If you're talking about colors, then how can we miss out on the paint company? So Kansai Nerolac it would be.
All right, Kansai Nerolac, that would be. It was a fun, rapid fire round with you, Sid. With that, I would like to thank you for taking out time and joining in. Of course, wishing you, your family, and your entire team a very happy and prosperous Diwali. Of course, we are heading into Dhanteras. Wishing you a very happy Dhanteras as well. And in the coming Samvat, Samvat 2082, I hope you prosper and you have a profitable Samvat 2082. Health, wealth, peace, prosperity, everything comes your way. Here's wishing you a very, very, very happy festive season.
Thank you so much, Nandita, and I'm always happy to be on your show. And whatever you said really, means a lot. And I wish happy Diwali and happy festive season to Money Control team and its viewers. Thank you so much.
Thanks a lot. With that, we've come to the end of this edition of the Makidar Diwali stocks and this edition of Opening Bell as well. Thanks a lot for tuning in. Wishing all our viewers a very, very happy Diwali, a very happy Dhanteras. May you have, good health, peace and prosperity coming your way in the new Samvat. May you have a profitable Samvat 2082. And of course, keep watching Money Control as we help you navigate the markets and get you all the latest on the domestic news as well as world news. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and I'll see you soon.